Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 22.99% year to date. Our stock market strength color signal is green. And here at Spy Trader Now, what we do is we want to beat the returns of the S&P 500 buy and hold investor. Their portfolio is up 19.55% year to date. So we are accomplishing that goal with our model portfolio. Last week, the S&P 500 gained 1.42% for the week. Now, here on this weekly candlestick chart for the last 5 years, you can see how basically we had a low, we had a higher high, we have a higher low, and then here we have just broken out above this old high. So that is why the S&P 500 is now making new all-time highs. You can see in the thumbnail really well how this last week's action, which is this candlestick right here, and how it closed right there, how it made all-time highs. Now we do still have a negative divergence in this chart. Here on the MACD, you can see a lower high, and we still have, and you can see it really well in the thumbnail, how the MACD has not crossed above its signal line. Now, the last time it came up to the signal line, it also did not cross above it and then crashed below it. This time, will it come up above, or will it do the same thing as it did last time? So we're on a wait and see on this particular action right here. But so that negative divergence is still in play until at least the MACD crosses above its signal line. Last week, we made no trades. All right, here are the trades that I've made for calendar year 2024. We start the year off with $100,000, and then we grow the portfolio. This is our current portfolio right now, how much it's worth, and there is our percentage gain. We have 2 open positions, and I highlight those with the yellow boxes to indicate where we currently stand. Now, we do currently hold 200 shares of SPY. We've held them for quite a long time, and we purchased those on 129.24. So early in the year, we have a nice healthy profit of 16.5% or $16,100 on those 200 shares. And then we've been playing around with options on top of all of that to get the returns that we're at. Now, our current option, which is an in-the-money covered call, is showing a negative $1,166. Now, the reason why it shows a negative is because I cashed this out as if I was going to close this covered call at today's video, which is the 14th. But in excuse me, it's not the 14th. It's the 21st. I forgot to update those dates. So it's 9/21/24. That's the price here. That's the closing price right there for 9/21/24. But I'm not going to close this position. This is just a paper loss. This option expires on 9/30/24. So it's either going to expire worthless and I'm going to take no loss, or the market is going to correct and I'm going to buy to close it at a price lower than when I sold it. I sold it for $42.22. So there's no way I am going to close this position at a number higher than 42.22. So for right now, we're holding on to our call, our in-the-money covered calls, and that's it. So we have those 200 shares are protected. Then we have downside protection all the way to $520. Currently, the market is at 568.25. Now, here is a graph where we compare our model portfolio, which is in blue, against the S&P 500 buy and hold investor in pink. And this is based off of a percentage basis, so we can see how well we're doing. Now, because I've got those in the money covered calls, and because the market advanced, the S&P 500 was able to take advantage of that advancement. I, on the other hand, was not able to participate in this advancement because of the in the money covered calls. All right, now we are looking at a 6-month daily candlestick chart for the S&P 500. And here you can see pretty clearly how we had the high there. This one here was technically a lower high, but then we just broke out and surpassed this high and this high right here, especially on that candlestick right there. We're starting to soften up a little bit right here. But if you were to go long this market, the safe bet would have been after this trend line here, when you got a close right there, that gave you the confirmation that we were breaking out. So from the point that where we broke out to where we are at right now would be 1.6%. So we are technically missing out on 1.6% gains if you wanted to play it safe and wait for the official breakout, which would have been this close right here. So I don't like to lose out on any percentage points, but I am a trader and I do get FOMO and I do want to be cognizant of exactly what I'm doing. Now we're looking at a ratio chart for the NASDAQ 100 against the S&P 500. Now the ratio chart is the one that is in red and black. We also have the S&P 500 in dark blue, which is this line right here. On the ratio chart, what you see on the MACD is you see higher highs. You also see that the MACD is positive. You also see that we are trading above the 10-period moving average on this daily chart. So you can see that we bounced right here at the 10-period moving average and it is moving up. Now we do have a trend line drawn in here from that low to these touch points here, and it seems to be respecting that line. And right now it's kind of moving sideways, so who knows if it's going to start coming down here. And it actually might start coming down. I'm predicting softness over the next week. So, but looking at this, we are on a risk-on situation. All right, now we're looking at the VIX Volatility Fear Index. Here we have 3 ranges. So above this green line is the upper range, which is bearish. Between these 2 green lines is the low range, which is bullish. And below this green line, you have the ultra low range, which is very bullish. And you can see how much time we spent in the ultra low range. Currently, we're right in the middle of the low range and the ultra low range. Irregardless, both conditions, we are in a bullish condition as compared to the VIX. You can see that the MACD is negative on it's below its signal line. Slow stochastics is also heading south, getting below 20. All of these things tell you that the S&P 500, which is here in dark blue based off of this right here, is going to basically go sideways or up. The VIX has no signs that it is going to be traveling down according to this chart. Okay, now we are looking at seasonality, and this is a monthly chart for the S&P 500. And currently for the month of September, we are up 1.12% for the month of September. For the last 5 years, every single month for the month of September has been a negative month. We have not had one positive month. You can see that we currently have a green candle for the month of September. If we are going to be in lockstep with the last 5 years, this candle is going to turn red. We basically only have 1 week of trading left. It's 1 week and 1 day technically, but for essentially we have next week for this candle to turn green. And if indeed that turns green, that means that 1.12% gain that we currently have is going to go the other way. So that's based off of a seasonality basis. So based off of that, the market should move sideways to down over the next trading week. All right, now we are on the Think or Swim platform. This is a 3-year weekly chart for the S&P 500. And the essential thing that I want to show you in this weekly candlestick chart is that you have a low, a high, a higher low, a higher high, a higher low, and now you're starting to get a new higher high. Now, obviously, we are in a rising phase here. This low here represents that low. This low represents that low. And this low is yet to be determined. And there's about 1 to 2 weeks left of trading for this to come in, for this low to be established before we start going into the next rising phase. So for these reasons, I think that this is another evidence that's telling me that I'm expecting a little bit of a pullback here over the next trading week. That's what I'm thinking looking at this chart right here. Let's switch over and look at the daily chart. So we're going to go from a weekly to a 1-year daily, change my cycle brackets to daily, and blow this up and bring this down so we can see this kind of nice. I've put in here a Fibonacci, and let me show you which Fibonacci that is. It's this one. It's the Fibonacci extension. I use the retracement and the extension quite a bit. But right now we're looking at a Fibonacci extension. And that is based off of this low, the high that we recently made, and the cycle low right here. And when you take and drop that in, it gives me these Fibonacci's. And I put in here a target zone in red from the 50% to the 78.6. And we clearly hit and are in that target zone. As a matter of fact, we technically hit the 61.8. So by hitting that 61.8, we essentially have established and hit and met this cycle's target. So looking at a cycle, you have a rising phase, a flattening phase, and then a falling phase here. Well, we've kind of hit that rising phase here. We should be kind of flattening and then coming down if we're going to somewhat kind of follow suit with the cycle where you have a low, a high, and a low. So the high or the target has been met. All right, here's a chart that I made for an Excel spreadsheet. And what this does is it tells us the strength of asset classes and the 11 sectors of the S&P 500. But basically, we're green in both of these. And basically, we had a 91 this week and a 91 last week, telling me, and here we had an 82 for the sectors and 82% last week. Both of these are holding up. So actually no movement, both of them identical to last week's action. And I also put down here green when we have 5s and 6s, which is the max. 6 is the maximum number, so telling you got a lot of strength. 2 classes here are showing less than 5 and 6, and ironically, one of them is technology, where it only came in at a strength of 4. Now, technology, which is a major part of the S&P 500 at 27.16%, is something to watch. So if technology is going to start to lose ground on us, then you can sure bet that the S&P 500 and a lot of these sectors are going to start falling down as well. Something to be watched. All right, now we are looking at a chart for the 10-year U.S. Treasury yields. That's the candlestick chart right here. Now, I had put in this green line here because I was expecting upward activity, which did not happen, but it is finally starting to happen. You can see here in the thumbnail how we are starting to come up. Well, as if indeed the yields are going to come up, and then here you can see in this black line, that black line is TLT, which is 20-year bonds. And in blue, we have got the S&P 500. Well, you can see that the 20-year bonds, TLT, has already dropped from its high here down to this low. Well, if the yields continue to advance, you can bet that the S&P 500 is going to be following suit with TLT like that, meaning that there's going to be softness in TLT if the yields are going to stay and hover or could continue to advance this way. It looks like, and the reason why I drew this line here is because I saw this high right there and I see that low right there, kind of giving me the indication that this is a trading range that we're in. Until we break out of this trading range, we are in this trading range. Okay, guys, this is a quick intra-month video, and now we are going to wrap things up with the market summation. So, as of September 21st, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now, the market is advancing, but headwinds will keep any gains modest. We're going to hold our current position and evaluate next week. I will do a full monthly video next week, even though there'll be one trading day left for the month of September, because I want to give you guys one full monthly video once per month, and ideally it'll be right at the end or beginning of the trading month. So, even though I give you guys a ton of information, the market is an 800-pound gorilla, and the market is going to do whatever it wants to do whenever it wants to do it. So be respectful of the market and that 800-pound gorilla. I hope you guys got some valuable information out of this video. If you have not done so already, smash that like button, subscribe to my channel, and ring that bell to be notified when I post a new video. I thank you and wish you good trading.